Hello everyone, a very good afternoon. Welcome to the CAIIB BRBL Macmillan MCQ series. Today we are going to cover the MCQs from our Module C. So we'll be doing this session in two parts. Till the Surface Act, we'll be doing today the MCQs from the Macmillan book till the Surface Act, and then the remaining acts we'll be covering in the next session. So let us start with the first question. So when we talk about the module C, you can expect minimum 30 to 35 marks questions will be asked from here. And there are the important acts and laws like the Integrated Ombudsman Scheme, the Micro, Small and Medium Enterprises Development Act, Surface Act, IBC Code, the RDB, the Bankers Books Evidence Act, Consumer Protection Act. So some very important acts are there. Questions, straightforward, true, false, no option questions, case study questions. Everything are asked from Module C. So let us start with the first topic and first question from the Module C. So the first question is under the scheme. Which scheme? The Integrated Ombudsman Scheme. Appellate authority would be the, so under the RBI Integrated Ombudsman Scheme, the appellate authority is the Governor of RBI, Finance Minister, Deputy Governor of RBI, or the Executive Director of RBI. Try to answer this question. Who acts as the appellate authority under the Integrated Ombudsman Scheme? So the correct answer is D. The executive director in charge of the department which is administrating this scheme. So the correct answer will be D. What is the maximum period for which an ombudsman or deputy ombudsman may be appointed under the scheme? So what is the period of appointment of an ombudsman or deputy ombudsman under the Integrated Ombudsman Scheme? 1 year, 3 years, 4 years, or 10 years? The correct answer will be B, 3 years. The integrated ombudsman we appoint the ombudsman for a period of 3 years. So the banking ombudsman scheme, the ombudsman scheme for NBFCs, and the ombudsman scheme for digital transactions, they were merged into the integrated ombudsman scheme of 2021. So wherever a customer faces a deficiency in service, they can make a complaint to the integrated ombudsman by following the procedure. If they're not satisfied, they can also make an appeal to the appellate authority. The deputy ombudsman is a person appointed by the RBI and even the ombudsman. All right, so the correct answer, the appointment and tenure. The RBI may appoint one or more of its own officers as ombudsman to carry on the functions for not a period exceeding 3 years at a time. Now, these are the true false questions. All complaints may be sent under the scheme to the CRPC center only. Is this statement true or false? So, what is the procedure for redressal of complaint? The complaint can be made online or the complaint can be made to the CRPC if in the physical format. So this statement will be false. The ombudsman would send a copy of the complaint received from a customer of a regulated entity to the regulated entity. The statement will be true. So when the ombudsman receives the complaint, they will send notice along with the copy of the complaint to the regulated entity, the bank, NBFC, any other financial institution. And they will be required to furnish the documents as to why the relief prayed should not be granted. So the statement will be true. If a complaint made by a customer to a regulated entity is not replied, what is the minimum period after its receipt by the regulated entity? May the customer make the complaint to the ombudsman? So, the complaint first will be made to the regulated entity, and the regulated entity has to give a response within how many days? Within 30 days. If the regulated entity does not give a reply, or the customer is not satisfied, or they rejected the complaint without any apparent reason, then the complaint can be taken forward to the ombudsman. So the period is 1 month. The bank or the regulated entity has to reply to the customer within a period of 1 month. Next, we move on to the Micro, Small and Medium Enterprises Development Act. Which of the following statutes provides a current definition of MSMEs? The MSMED Act, the Delayed Payments Act, the Minimum Wages Act, or the Factories Act? So the correct answer is A. The Micro, Small and Medium Enterprises Development Act of 2006. It was enacted to facilitate the promotion and development and enhancing the competitiveness of the MSMEs. It represents the most comprehensive regulation over the MSMEs in India. Alright, so the correct answer is A. MSMEs are governed by which of the following ministries? The Ministry of Financial Services, Ministry of Commerce and Industry, Ministry of Small Scale Industries, or the Ministry of Micro, Small and Medium Enterprises. Very basic question. The MSMEs are governed by the Ministry of Micro, Small and Medium Enterprises. Alright, next. What are the revised norms regarding the investment in plant and machinery in respect to the micro enterprises as per the MSMED Act? See now, as per the MSMED Act means you need to answer according to what is given in your book. But now in 2025, a new definition of MSME has been given regarding the investment and turnover. So if the institute asks you about the revised definition, you need to answer that. Here, according to the MSMED Act, the investment in plant and machinery does not exceed 25 lakh rupees. Investment does not include increase 1 crore rupees. Investment in plant and machine exceeding rupees 2 crore. So according to the old definition, the correct answer will be B. Investment in plant and machinery not exceeding 1 crore rupees. If we talk about the new definition of MSME as per the 2025 amendment, the investment limit has been increased approximately 2.5 times, and the turnover has increased almost twice. The turnover criteria has increased twice. So the investment for a micro enterprise is 2.5 crore and the turnover should not be more than 10 crore. For the small enterprise, the investment will be 25 crore, turnover 100 crores. And for the medium enterprises, investment up to 125 crores and turnover up to 500 crore. So from the old definition, both the investment and the turnover has been increased. Where an application is made to the court by a buyer for setting aside any decree or award made either by the Facilitation Council or by any institution or center providing alternate dispute resolution services, what percentage of the amount of the decree or award is to be deposited with the court by the buyer? What will be the correct answer? So if the buyer pleads not guilty, this is the case of the unpaid seller. The buyer says that the decree should be set aside, the award should be set aside. The court will hear the court's case, the court will hear the buyer only after the buyer makes a deposit of 75%. So the MSMED Act protects the unpaid seller as well. So the correct answer will be B. Next, we are moving on to the most important unit of our Module C, which is the SARFAESI Act. Okay, so first we have the true-false questions. Banks obtain security while lending, so that in case of need, the money can be of securities. Is the statement true or false? Actually, this requires the fill in the blanks. Right? This is the fill in the blanks. Banks obtain securities while lending so that in case of need, the money can be dash of securities. Money can be realized by sale of securities. Realized by sale of securities. The SARFAESI Act is applicable to the housing finance companies whose names are notified by the central government. True or false? Is the SARFAESI Act applicable to the HFC? Yes, this is true. So the institute can also ask you direct questions without any options, true, false. They can ask you the fill in the blanks questions as well. All right. Whether movable securities in possession of the bank can be sold without the intervention of the court. Now, a court is required to sell the security. Yes, bank can sell as provided in the Contract Act. Yes, the SARFAESI Act has made provisions to that effect. No, until the account is not declared as NPA by the bank. So, can movable property, movable securities be sold without court intervention? Yes, it has been made applicable by the SARFAESI Act. So whenever the loan gets NPA and the bank has to recover their dues without approaching the court, without waiting for the court proceeding, they can initiate the powers under SARFAESI Act. As per the laws existing today, the mortgage security cannot be sold without a court intervention. Is this true? Option A, yes, court intervention is required as per the provisions of the Transfer of Properties Act. Option B, no, SARFAESI Act has now made enabling provisions. Option C, yes, since the Contract Act has made no provisions about any court intervention. Or D, no, due to recent amendments in the Transfer of Property Act, no court intervention is required. So we have studied about the SARFAESI Act. Accordingly, the correct answer will be B. SARFAESI Act allows the banks to sell the mortgage property without court intervention. So the correct answer will be B. Provisions of the SARFAESI Act 2002 applies to which securities? Any movable or immovable security charged to the bank or financial institution, to mortgage securities only, where the security interests are created for the repayment of financial assistance given by a bank or financial institution, to the properties owned by the defaulter but those that are not a charge to the bank. So what will be the correct answer? The correct answer is that the bank has given a loan. It is a secured loan and the security interests are created in favor of the lender for the repayment of financial assistance. So the correct answer will be C. The correct answer is C. In the Mardia case, what did the Supreme Court declare as invalid? So when the SARFAESI Act was enacted, it was questioned. The constitutional validity was questioned in the Mardia Chemicals versus Union of India by one section, which is the section 17, subsection 2. It said that when the borrower want to make an appeal to the DRT, they had to deposit 75% of the amount claimed by the lender. The Supreme Court declared that this condition of the deposit of 75% of the claim amount is unreasonable, oppressive, arbitrary, and violative of the Article 14 of the Constitution. So, this act then removed the Section 17, subsection 2. Condition to pay 75% of the amount as precondition while preferring an appeal to the DRT. All right. Next, we have some true and false questions. The SARFAESI Act is made applicable to pledged securities only. Is the statement true? So, in this case, the property could mean an immovable property, movable property, any debt or right to receive money, receivables, as well as intangible. And the SARFAESI Act is made applicable to the pledged securities? No, this will be incorrect. For the enforcement of the mortgage security, court intervention is required even for actions under the SARFAESI Act. This we have already covered. This statement is completely false. Banks and financial institutions can issue notice for enforcement over security under SARFAESI Act only if these securities are not in possession of the creditor and only when the account is classified as non-performing asset. So the bank, before taking possession, selling or attaching the property, they have to give a notice to the borrower that the borrower should pay within 60 days. If the borrower does not pay, then the remaining procedure will be immediately started. If the borrower does not pay within dash days after notice, within how many days? A 60 days notice is served. The secured creditor can take possession of the property of the security. Take possession of the security. All right. After receipt of notice from the secured creditor of the repayment of dues, the borrower is legally prevented. Correct. Now, once the borrower receives the notice that this property is now under the property of the bank, the borrower cannot sell the property, the borrower cannot transfer the property, dispose of the property. So, it will be legally prevented on request of the secured creditor of the district magistrate or the chief judicial magistrate can take possession of the security for handing it over to the creditor. Is this statement true? So when the creditor has to take possession of the property, they can take help of the DM or the CJM. So this is true. When the management of the company is taken over, the directors are entitled, incorrect, they're not entitled for any compensation for the loss of job. So when there are two provisions that we are talking about here. First provision, to take possession of the property under securitization, what can the bank do? Bank can make an application to the DM or the chief judicial magistrate. They will look into it and pass the necessary order. Second provision, the directors of the company, when they have to leave their possession, because now the possession has been taken by the bank has taken over the management. The directors are not entitled for any compensation. When any bank or financial institution obtains a charge against property, with which authority will the transaction be registered to? So, under the SARFAESI Act, it is important that all the charges are registered with the central registry. The correct answer is central registry. The central registry is established for recording all the charges created, modified, and satisfied. All right. When can the provisions of the SARFAESI Act 2002 be invoked for proceeding against the charged property? When the bank feels that it is necessary for recovery at any time, when RBI directs to do so, when there's default in repayment of the borrower, or when there is default in repayment and the bank declares the account as NPA. So the correct answer is D. The banks, the financial institution, can proceed against the charged property when there is a default in repayment and the account has been declared as NPA. It means it has remained unpaid for a period of more than three categories of special mention account. Whether existing or future receivables are property. Can existing or future receivables be treated as property under the SARFAESI Act? True or false? Yes, it can be treated as a property. From the following, which function is of a securitization company? What does the securitization company do? They take the pool of assets from the financial institution, they convert them into tradable securities which are traded. They are allowed for investing by the qualified institutional buyers. So the correct answer is acquisition of the financial asset from the originator. This now becomes a derivative. The originator, they pass on the assets from their balance sheet to the balance sheet of the ARC. This is the responsibility of the securitization company. All right. Next, an ARC needs registration from the RBI for commencement of business. True or false? This statement will be true. So for the registration of ARC, it should obtain a certificate of registration and it should have the owned funds at the time of registration not less than rupees 2 crore or any other amount which is specified by RBI. So this statement will be true. Right of acquisition of financial asset by the ARC is subject to the prior agreements or contract. Is this statement true or false? This statement will be completely false. So if later on, if one bank has already given a loan keeping one property as security, other bank, when the customer approaches them for a loan with the same property being offered as security, the bank should check whether it is encumbered or unencumbered. So it is false. Acquisition of financial asset, ARC, is with the liability also over such an asset. So does the ARC get liability or not? This statement will be false. There is no liability. For each asset acquired or to be acquired by the ARC, there should be a separate scheme for every asset. Separate scheme is prepared and there are trusts who are managing it. When the ARC issues security receipts, the holder is entitled to a dash in the financial asset. The holder is decided to have an undivided interest in the financial asset. The security receipt issued by the ARC requires registration. True or false? There is no requirement of registration with RBI. After completion, the existing companies, is it true or false? This statement will be false. Any direction issued by RBI under the SARFAESI Act has binding effect. Binding effect means all the parties they have to follow it. So a statutory effect and it is binding on all the parties. This will be the correct answer. So whatever award is passed by the ARC can pass an award after hearing both the parties, or the ARC can pass an about which is ex parte only after hearing one side if the bank fails to provide the documents. Next, enforcement of security interest. After application of the SARFAESI Act, what have the existing companies to do about registration with RBI? They are automatically deemed to be registered. They are required to stop functioning. Existing companies do not require registration or they have to get registered within 6 months of the commencement of the act. The correct answer will be D. If a new company wants to establish an ARC, first they need to get prior approval and registration from RBI. However, if a company was already, when the ARC gets registration, it is on the basis of certain conditions imposed by RBI. RBI has the power to cancel the registration as well. This registration cancellation can be because of two reasons. One reason, one set of reasons after giving a chance to be heard. Second, without giving a chance to be heard. So the company does not keep accounts as per the RBI norms. The company ceases to carry on the business of securitization. The company fails to hold investment from the qualified investor. The company does not fulfill any of the conditions imposed at the time of registration. So A, C, and D, these can be ratified, they can be corrected. But option B, when the company is no longer carrying on the business of securitization, without hearing, without giving a chance to be heard, the registration will be cancelled. Next, enforcement of security interest. Asset reconstruction means dash by an asset reconstruction company of any right or interest of the creditor in respect of any dash. So what is the meaning of asset reconstruction? The ARC acquires the financial assets of the regulator and regulated entity, and the purpose is to provide financial assistance, right? So asset reconstruction means acquisition by the ARC of any right or interest of the creditor in respect of a financial assistance. SARFAESI Act is applicable to the RRBs, true or false? It is not applicable to the RRBs. If we talk about the applicability, enforcement of the security interest, it is not applicable to the RRBs. Mortgage or asset backed debt instrument can be issued to the general public. No. The security interests which are created by the ARC are to be issued only to the qualified institutional buyers. So this is false. A guarantor to the loan is within the meaning of the word borrower under the SARFAESI Act. Is this statement true? Yes, this statement is true. So the mortgagee, the secured creditor, can enforce their action against the borrower and the guarantor as well. SARFAESI Act is applicable only when there's a security. Yes, there should be a security. It should be a secured asset. Has SARFAESI Act defined hypothecation? Yes, the hypothecation has been defined under the SARFAESI Act. What is hypothecation? Wherever a charge is created on the movable asset. On giving a notice of default by the creditor, the borrower gives a reply to it. So when the notice before taking possession, obviously a 60 days notice has to be given to the borrower. And if the borrower claims anything or they say that something is written wrong in the notice, what will the creditor do? Ignore the notice as the law does not provide for any reply. Wait until the borrower initiates any legal action. Give due consideration to the reply as per the requirements. Take the matter before DRT. The bank should not ignore whatever reply or response the borrower has given. They will give due consideration. On sale of the security interest, the sale proceeds are appropriated firstly. So there's a waterfall arrangement which is followed. So when the property is sold, the security asset is sold, whatever money or proceeds that have been generated will be first used to pay the cost, charges, and expenses for the preservation and protection of securities, insurance premiums, etc. Then later on, for the payment of dues of labor, for the government dues, crown debts, and so on. But first, for the payment of costs and charges for the securitization process, then to the secured creditor. After coming into operation, the provisions related to the central registry. The banks and the financial institution have to register all security interest with the SARFAESI. Is this statement true? Yes. So all the charges which are created, modified, satisfied have to be registered with the SARFAESI. The period stipulated in the Act for recording satisfaction of security interest from the date of the payment or the satisfaction is what? It is 30 days. Within 30 days, it has to be filed. Duty to report satisfaction of charge to the central registrar is on the creditor or the borrower. It is on the creditor. And if the borrower does not get it, still the penalty liability will come to the creditor. The creditor will make the application, and if they have to pay any fee, that they can recover from the borrower. But the duty is of the creditor. Besides the SARFAESI Act, some other laws require some registration of charge. Is such double registration avoidable? Yes, the creditor can choose under which law he needs registration. No, registration under the SARFAESI Act as well as other applicable law will have to be made, as the SARFAESI Act is not a substitution for any other law. So if any other law also requires some charge to be registered, it will be followed. Just because the SURFACI Act is there does not mean that the other acts are not applicable. So the correct answer is B. The appellate authority under the Act is appointed by. Who is the appellate authority? We have already discussed the appellate authority, the director in charge of the department of RBI, and the appellate authority is appointed by the RBI. Can the ordinary magistrate take cognizance of offence under the SURFACI Act? No. The cognizance of offences. No court shall take cognizance of any offence punishable with relation to this act except upon a complaint in writing made by an officer of the central registry or an officer of the RBI, and the cognizance will be taken by the metropolitan magistrate or the judicial magistrate of first class only. No court below the rank than this can take cognizance of such offences. So this is a very important point. Next, for challenging an action initiated by the secured creditor against a defaulting borrower under the SURFACI Act, the borrower can go to the civil court for an injunction. False. The borrower will approach the DRT. Under the SURFACI Act, the borrowers are the first applicant to the debt recovery tribunal. All right. Can a bank take action against the SURFACI Act under the SURFACI Act against deposit under lien with it? Can the bank take action? No. They can take action only on the secured asset. Are hire purchase and lease contracts covered under the SURFACI Act? Again, no, they are not. After the bank's notice, a defaulting borrower has paid within 60 days a substantial amount and the present dues are rupees 15 lakhs, which is 15% of the claimed amount. Can the bank proceed to take possession of the property? No, it cannot. So these are the miscellaneous provisions. There are certain conditions on which the SURFACI Act is not applicable, like a lien on any goods, money, or security given under the Indian Contract Act, a pledge of movable goods, creation of security in any vessel, any conditional sale, hire purchase, or lease, any rights of unpaid seller, any property not liable for attachment, like agricultural land. Okay, so then we also have the when the borrower is given a notice and the borrower pays within 60 days a substantial amount, now the creditor will have to stay the proceedings. If on some points of the provisions of the Transfer of Property Act and SURFACI Act are different, which act will prevail? So if the points are different between the Transfer of Property Act and the SURFACI Act, like the very point that under the Transfer of Property Act without court intervention recovery cannot be done, the SURFACI Act will have priority. Okay, the SURFACI Act will prevail. Can a bank proceed to take action of the security after 4 years of the cause of action? This is false. This is the correct answer is no. It has to be taken within the limitation period. Provisions of the SURFACI Act are applicable to pledged goods, mortgaged property, securities that are not otherwise charged to the creditors, securities charged to creditors and not in possession of the creditor. So the correct answer will be D. The provisions under security, the SURFACI Act, the provisions is to take possession of the property. So only when the charged securities are not in the possession of the creditor. When do the rules framed by the central government under the Act get valid? After the appellate tribunal or the DRT approves them, on Supreme Court approving the same, immediately on framing of the rules by the government and notifying the same, when both the houses of the parliament. So the correct answer is D. Not just in SURFACI Act, in any act, if there needs to be an amendment, there needs to be a new rule. First, the draft will be placed in both the houses of the parliament. When both the houses of the parliament they pass it, approve it, then the rules will be passed. The central government may extend the time for the registration of transaction of security interest or securitization of asset reconstruction or modification for a maximum of 30 days only. So if there's a valid reason because of which the charge was not registered, the period can be extended 30 days at a time. All right. Yes, so this is false. Statement 2. The Income Tax Department considers attaching the property in Jammu and Kashmir belonging to Mr. X for the recovery of tax dues. Is such attachment order required to be filed with the central registry? Yes. Wherever the attaching of property is required, it is to be registered with the central registry where the security interests upon any property in favor of the secured creditor are filed for the purpose of registration. The claim of such secured creditor holding attachment will have priority. This statement is true. So, if there's a secured creditor who gave a loan and other creditors who gave a loan after the secured creditor, they should have checked getting the charge registered is deemed to be a public notice, so the secured creditor will have priority. Last question. Recovery of taxes by government departments will have priority even after the registration of security interest by the secured creditor. This statement is false. All right. So first the secured creditors will recover their dues and then the crown debts, dues to the labor and other employees will be paid. That is all for today. We still have some units which are left from our module C, like the RDB Act, IBC Code, Bankers Books Evidence Act, LSA, Consumer Protection Act, Law of Limitation and Tax Laws. This we are going to do next Saturday, the second part. The link will be uploaded and you will get the notification. And to study and revise all of these topics in detail, join the CAIIB Super Elite all in one plan. You'll get live classes, notes, mock tests, everything under this one plan. All right. And like this, we are going to cover all the important topics, MCQs, questions, case studies, everything on the YouTube channel. So make sure that you like, share, and subscribe to the Oliveboard JIB CIB English Medium channel. And if you have any doubts or any queries, you can let me know in the comment section. Now I will meet you with the second part of our module C on 14th of March. And we will cover the remaining units. So thank you so much. Keep revising, keep studying,